Channel. Today I wanted to go over the ULTY YieldMax stock that we went over last time. As always, if you're new to the channel, make sure to subscribe so you can get more of these YieldMax and income opportunities in your inbox every day when we upload. But also, without any further ado, let's get straight into the video. As of today, I wanted to give an update. From previous video, we were at about 207 on the YieldMax portfolio, but now we've dropped down to 195. Now this is all estimated because they give their estimates on a per distribution basis, and once they're announced, then we actually know what they're going to be. But at the moment in time, for most of the funds that are going forward, as you can see, it's giving an estimate. Now, again, this software is in the description if you guys want to get this dividend tracking software. It's been pretty useful for me, and I came across it in a Google search, which I thought was amazing. But the link's in the description. However, this is what we're at right now, at about 530 a day and a 30% yield across the board. Now, to get into the reason I like ULTY as a stock, ULTY gives me the exposure that I would like to see in a YieldMax fund, right? So it has holdings such as CleanSpark. Well, it used to, now it doesn't anymore, which make it a safer investment than owning a single YieldMax fund due to the diversification on the investment. However, let's get straight into the holdings of what it has. So now, which has made me, a little bit more excited, is they have AMD and they have calls on AMD which expire on July 24th. They're covered calls as always, of course, and you can see the market value of all of these covered calls and the amount of contracts that they have, which is 440, and it's at a strike price of 190. And you can see we also have the company American Superconductor Corporation, and you can see that they also have a call on this with a strike of 29, and it is about 3,029 contracts. And we have ARM Holdings, which I believe is a chip company, and you can see that they also hold stock for all of these companies as well because they are covered calls, right? So we have AST Space Mobile as well, Bilibili, which is a Chinese video company. I believe they have like 340 some odd million users globally, not globally, but for on their platform, and Coinbase as well, which is a company that we all are very well aware of. But again, like I said, the diversification on the ULTY is one of the reasons I like it, in addition to its 96% yield, which is already like astronomical. It's a crazy amount of yield, so we don't see that very often with a lot of funds, which is why YieldMax has gotten so far and so many people are talking about it. Now, why is ULTY on my radar, right? So last time I went over it was at about 99% yield, but now it's at 96.38. So this is a little bit different, but like I had said, the reason I like it is because of the multi-stock options exposure. Now, so we can see the stock has somewhat started to stabilize. We can see that it is not under the floor that I would like it to go to if I wanted to go all in, but I've made a little white line there for that. But we can see it started to stabilize around the 14 area. You see it's gone down after the distribution, then creeps back up, and it's probably going to drop again on distribution day and then creep back up. This is something we want to see, right? Because in the beginning, as we see on the chart, is not a pretty one. However, if we look at the chart from past the distribution in May onward, we see that it has stabilized over the last 2 months, which is the reason that I took a larger position in ULTY. Previously, if you had talked to me and said that, hey, do you want to take a position, and it was at $20 and it dropped down to 16, I would say no. However, when I saw this data, I was able to say, okay, look, it's moved a certain amount, and now I'm more comfortable taking a position, right? So we want to see these with these YieldMax funds as well. If you see one that's dropping a lot in due to the NAV erosion, but also a couple of other things, if you see it dropping a lot, I wouldn't recommend taking a position in that one until you see it stabilize. However, sometimes with some of the single stock ones, if you think that that stock particularly is going to do very well in the next, say, coming 6 months, then it would make sense to take a position, right? Like I took a position in TSLY when Tesla was around $150 in addition to getting the underlying. As I said in the previous video, if you like the underlying stock, then you should be buying it as well too, right? However, just food for thought. Now, getting into the July distributions, we have ULTY, YMAG, which is the other YieldMax. There's YMAX and YMAG. We have them both there. As you can see, the prospective yields are listed there as well. Then we have QDTE and XDTE, which I'm going to get into the channel later, but these are weekly dividend options income funds, which is really, I think, important when constructing a holistic, YieldMax, Defiance, Cornerstone, all these different kinds of things that are in the portfolio. I used to have Cornerstone, which was CLM, but that's for another video. However, all of these companies that give us these higher yields, it's important to in my opinion, distribute among all of them, because we get the benefits of having weekly dividends with the QDTE and XDTE, but we also get the stabilization of something, say, in the bottom, such as River North Opportunities, which is only 12.4% in yield every month. However, that has produced the most amount of capital gains for me at about 21% from purchasing about a year ago. So not only did it go up 21%, it also returned about 12% in the dividends as well, pre-tax. However, we also have PYPY, and which is another one that yields around 25%, and those are pretty much all of the ones that are in the rest of July. But I wanted to go over these distributions so you guys could see them and visualize them. Now, again, I have a pretty unique strategy when it comes to these funds. My kind of scenario is a bit different because I don't have to live off of these in the current moment. However, I plan to in a couple of years. So my strategy is I'm living off of other non-stock investments at the current time that I'm making this video. That makes it so I don't have to touch these stocks, right? I don't have to, say, hey, I'm gonna take all of this. I need to put all of this in and take all of the yield, and I cannot reinvest for NAV erosion whatsoever, which I would not recommend at all. Please don't do that. But what I'm doing currently is I'm splitting the 50-50, the distributions that I receive after tax. I take the taxes out and then I reinvest them into YieldMax funds, and the other 50% into indexes such as QQQ, VOO, which is a total stock market index, and SCHG, which is a Schwab growth companies index, which I like a lot because it includes NVIDIA, Netflix, and all the stocks that I want to have exposure to that I don't get the capital appreciation from with these YieldMax funds. Now, I want to also go over the insane compounding that we went over last time on the YieldMax funds, which is just absolutely, crazy. But let's assume we invest everything into ULTY, right? This time with a 96% yield, not 99%, because obviously it's dropped based on the latest June distribution. So we are going to assume that 39% of that yield goes to NAV erosion and taxes. I believe I increased it from 36 last time, but we reinvest some after tax to keep the NAV erosion at bay. Now at 50% a year compounded, look at the 10-year return on this $1 million we started with, right? This is again why I think it's so absurd. But if we take a look at it, this time I've added variance into the chart. So I've made it so in case it goes 5% down or 5% up, you can see what that 5%, how big of a difference it makes in 10 years, right? So if we at 45% a year, we're at about an 82x, 1 million to 82 million, starting with 1 million, right? If we are at about 50%, we're at from 1 million to 134x, which is 134 million. Now, that extra 5% at 55, if we are able to hit that, which is very ridiculous, but if we do in this hypothetical scenario, we're at $216 million, right? Now, this is absolutely crazy, and it makes me beg the question of how these YieldMax funds are going to, sustain themselves through a market crash or when the market starts to pull back. And we haven't really seen too much of that yet, except with TSLY, which we saw Tesla completely crash all the way down to 144, and TSLY, I think, was down over 50% at one point. But that was a point that I took a small position because I started to like how Tesla was shaping up to be, and I thought it was an amazing opportunity to not only get the underlying stock of Tesla, but also to get TSLY. Now, like I just said, is this sustainable forever? Probably not, but I don't know, and you don't know. So there's only one way to, know this, is to just have a strategy when we're investing with these funds and doing all of these different investments and creating diversification and all of these kind of things. But it's important to know that this is all of investing could be potentially a risk, right? So, and I'm not a financial advisor like I'm poised to say in all of my videos, so you should do your own research, but this is for entertainment purposes only. But understand what you're investing in. Like I just said, these are options income funds, and they don't hold the underlying stocks. They don't hold TSLY, does not hold Tesla, meaning like they do hold the stock, I believe, but they do not allow you to participate in the capital appreciation. So like we had saw in some of these funds, if they're a covered call fund, then they do hold the stock because they're doing covered calls, which means you need to have the underlying stocks in order to do them. However, you do not get the upside from that stock in that case. So these funds also use return of capital. If you look at their distribution statements, they return your own money to you, which is essentially what return of capital is. So again, understand what you're investing in. Now, like I said, the dividend portfolio software is in the description because people have asked me about where the screenshot came from the last video that I made. So if you want to use it, there's a link in the description. I believe it's paid. I can't remember what the subscription is off the top of my head, but if you want to get it, it's in the description below. And to preface the end of this video and to kind of give a conclusion, I like ULTY. But my point still stands that these are high risk, high reward investments, and the best scenario is to invest in a market that is not moving towards a bear market. So if you want to play with these YieldMax funds and put your money in them, then it's important to know what kind of market that we're in, right? If you think that one of the stocks that you're picking an individual YieldMax fund for is going to crash, then I don't believe that it's a good time to get into it. However, if you think it's going to go up, then potentially you should get into it, because not only will you get the income, you'll also get some of the upside, but that upside is capped. So that's what's important to remember with YieldMax. So I would do a strategy of holding the underlying stocks such as Tesla, and also using TSLY to get income to buy more Tesla, if that makes sense, or to do my strategy, which is buying the indexes. However, this has been it for this video. I hope you guys enjoyed it. It is also very late. It's about 4 in the morning, which is why my thoughts are a little bit jumbo-mumboed, but I hope this has given you some kind of, information, and do with it what you will. But this is all for this video. Like and subscribe, comment if you have any questions, and I will see you guys in the next one.